Well, hi everyone. Monica Sipes here with Exental Wealth Advisors. I'm partner and senior wealth advisor with the firm. We wanted to spend some time today going through some of the personal impacts of the CARES Act that was passed last week and talk about how that's impacting our clients on a personal level. I'm joined by Jared and Kyle. And we just wanted to spend some time kind of having a conversation around what some of the programs look like and how that might help each and every one of you with your own personal decisions to make as we navigate through the coming week and months around coronavirus. So with that, Jared, I thought we could kind of spend some time going through some of the impacts as it relates to retirement distributions. I know a lot of clients are wondering how to get access to some funds that they had maybe earmarked for retirement. Do you want to talk a little bit about what that looks like? What are the rules associated with it? And how that might be helpful to some of our clients?
Yeah, I'd be glad to. So, the CARES Act, a big part of the whole point of the CARES Act was to provide liquidity to folks and make it easier to access funds. And so on retirement accounts, they did that a couple of different ways. They've made the law made some changes in terms of distributions that you can take without getting a penalty. So if you're under 59 and a half, normally if you take an IRA distribution and it doesn't fall into an exception, not only do you have to pay regular income taxes on the distribution, but you also have to pay a 10% penalty. That 10% penalty is waived up to $100,000 of withdrawals, and there are no withholding requirements. Normally, in certain types of retirement accounts, you would have to have withholding done, so you don't have to worry about that right now. To be able to take the distribution, up to $100,000 without that 10% penalty, it has to be for a specified reason. So, certainly if you've been diagnosed with COVID-19, that's included, or if you've had a spouse or a dependent that was diagnosed. Sort of the catch-all, and Kyle and I, we were talking about this a little earlier today, is just if you've experienced adverse financial consequences, which I think a lot of people would say that they've fallen into that category right now. And then, if you've been unable to work because of a lack of childcare. A lot of schools are out right now. I think nearly all schools are out right now. And so if you haven't had childcare available, you can take a distribution for that. Or then the last catch-all is just kind of anything that the IRS deems acceptable. So you've got really broad latitude for why you can take those distributions. And then, you're actually able to repay that back into that retirement account over a 3-year period and it not be a taxable event. So gives you a great access to liquidity, gives you the ability to take those dollars out, and then eventually not have a tax impact from that withdrawal. And you're able to recognize the income over 3 years as well. If you're not paying it back, you can spread out realizing that income.
So let's say I take out $100,000 and I'm only able to pay back $50,000. I have 3 years to pay back that additional $50,000 with no penalty, even though I'm not 59 and a half, correct?
Yeah, Kyle, you want to expand on that?
Yeah. So what will happen is that $50,000 over 3 years, it'll be broken into 3 different taxable amounts. So that $50,000 will be paid back over 3 years. You'll file your tax returns. The big downside to doing this is that you will have to go back and amend 2 years of tax returns when you decide to roll back that final amount in the end of the 3rd year. So that's a little bit of a downside, but for those of you who really need the income, it's kind of a minor inconvenience.
Perfect. So I thought I'm getting a lot of questions around stimulus checks and what does that look like? What are the implications of getting some of that stimulus check? Do I have to pay it back? Kyle, I don't know if you can maybe hop in and share a little bit more about what that looks like for individuals as well. And We're also getting a lot of questions around, can my kids file separately so that they can actually get the stimulus check, because maybe the parents are phased out over that 150,000 for married filing joint. Can you speak to that a little bit?
Yeah. So essentially, anyone who is either on Social Security, who has filed a tax return for 18 or 2019, is eligible to be considered for the stimulus check. Now, you do have to fall underneath thresholds. That's 75,000 in AGI for single filers, 112,500 for head of household, and 150,000 for married filing jointly. So that if you're over those amounts, it doesn't automatically mean that you're ineligible to receive funds. It just means that your benefit starts to decrease about 5% for every $100 after that. So now they're basing these stimulus checks on 2018 returns if you haven't filed a 2019, or your 2019 returns if you have already filed. Now, basically, it's a tax credit for the 2020 tax year. So if in 18 or 19, you are above those thresholds, however, you lose your job or have reduced income in 2020, then when you file your 2020 income, that's when you'll get your stimulus check. If, however, you were lower in 2018 and you have not filed your 2019 return, I'd advise taking advantage of the fact that the filing deadline has been pushed back. Go ahead and file your 2019s a little bit later, unless you think you're going to get a very large refund and you really need those funds right now. In that event, I would go ahead and potentially consider filing your 2019s. Now, if your 2018 and 2019 and 2020 were all above the thresholds, it probably means you were still employed, which is actually a good thing. So you would not be eligible for the tax credit in that event.
And Kyle, one other thing that we've run across, if someone runs into a situation where their 2020 AGI, they're above the threshold on their 2020 tax return, when we're looking at this about this time next year, it doesn't look like the IRS is going to be clawing back any of the credit. Does that sound right?
That's correct. Once you receive that check, it's yours to keep, no clawback.
And while we're on the subject of taxes, one little detail in the CARES Act that I think is getting overlooked, that many may care about, governments trying to incentivize us to be charitable. If you normally take the standard deduction, you can actually take an additional $300 as an above the line deduction. So this is for folks that don't normally itemize. They actually will get a benefit to make a charitable deduction of $300 maximum. So just a little detail in there that I thought we should mention as well.
And Monica, I think that's a cash only donation, correct?
That's correct. Yeah, it has to be cash.
So it has to be cash. It cannot come from a donor advised fund. But if you've basically written a check to the Red Cross or to another 501c3 and you're not itemizing, then you get that additional $300 above the line.
Correct. Yes, that's right.
Maybe a couple other things for people to keep in mind that I've had a lot of questions about are 2020 required minimum distributions. So, normally when we have our IRAs, we, reach the age, which going forward is age 72, where we have to take a required minimum amount out of our pre-tax style accounts or out of IRA style accounts. The CARES Act made some changes to that for 2020 so that individuals wouldn't have to take those 2020 required minimum distributions. So the eligible accounts for that are IRAs, SEP accounts, simple IRAs, a 401k, a 403b, a government 457 plan, or if you're a stretch beneficiary, under the Secure Act, there were some changes to how beneficiaries who inherited IRAs could take those. It applies to them too. So you don't have to take your 2020 RMD, if you have one of those eligible accounts. if you've already taken it, if you've already taken your required minimum distribution for the year, you have some options. So if you're sitting there saying, hey, I already took this in January, February, now I'd like to return those funds, not have that be a taxable event, or for whatever reason you're just wanting to put those dollars back, you can do that. You can do that depending on how far out we are from that event. There's two different processes, that two different tests, so to speak, to apply for how to do that. But the net effect is you can get those dollars back into the IRA and not have that be a taxable event for 2020.
And Jared, I might just expand on that, because I've had a couple of discussions with clients asking, well, why is that? And I think it's most likely just because the markets are depressed at this very moment, and just giving retirement account owners a little bit more flexibility. Maybe they don't feel like or want to pay the tax from that distribution when the market's down would be my guess. So just to expand on that point a little bit.
Yeah, I think that makes sense. Not forcing people to go liquidate assets to raise cash, or not having to go through hoops, so to speak, to avoid a negative financial outcome. I think makes a lot of sense. So, one other option that we've seen in terms of liquidity from retirement accounts is actually loans from retirement accounts. So if you think about your workplace retirement account, your 401k. If that plan allows for loans, the CARES Act increased the amount of loan that you can actually take. Normally that number is $50,000, right? That's the most that you can take out. But that's been bumped up to $100,000, or up to 100% of your account balance, whichever number is smaller there. And from a loan repayment standpoint, the repayments on those are delayed for a year, so you have time before you'd have to start repaying those loans. But Monica, in terms of where we're accessing liquidity, what are your thoughts in terms of a 401k loan, or is that the first place you would reach for liquidity, or recommend that a client access liquidity right now?
Yeah, I think it all, of course, depends on the financial situation of the client. And so I think that's where a conversation with a financial professional would really come in. For some, unfortunately, it's probably their only place for liquidity. A lot of gig workers or people that were laid off very suddenly are maybe having to do some of that. I probably would not recommend that to load up an emergency fund or something like that. But I do think that's where it's really important to have a conversation with a financial professional. I know that, you and I and Kyle have made ourselves available to act as a sounding board for friends and family of our clients. If you have someone important to you, they're important to us as well. So I would definitely recommend a conversation there.
Yeah, I think that makes all kind of sense.
Maybe we shift a little bit to student loans. That's another kind of big bullet point of the new act as well. Kyle, you're probably the most well-versed on the subject when it comes to the parameters around student loans. Do you want to talk a little bit about that?
Yeah, for the most part, it's pretty simple. Payments for student loans can be deferred all the way until September 30th of this year. No interest will accrue during that time period. The one caveat to that is that institutions aren't just doing this automatically. You don't just stop making your payments. You actually have to call them and let them know that you are experiencing adverse financial conditions, and you need to ask them and tell them that you intend upon discontinuing payments. And when those payments discontinue, because you've reached out to them and talked to them about it, this will not adversely affect your credit score.
I will say also with mortgage forbearance is high. I read an article this morning that those requests were up about 2,000% from the prior week. So I would just say it's difficult to get in touch with bankers and call centers right now. So just a word of advice with the student loan front, and also if you're considering a mortgage forbearance, that you've got to just have a lot of patience trying to get a hold of these folks for sure.
Yeah, some things are just taking more time than they normally would, and calling a lender, or certainly if you're having to do something like call the IRS for any issue, just buckle up, right? It's just we're all having to try to use maximum amounts of patience in trying to reach out to the folks that are hopefully positioned to be able to help us and help navigate these circumstances. So one other topic I know that's been on a lot of folks' minds is unemployment benefits. Certainly those benefits existed prior to the CARES Act, but the CARES Act expanded on those benefits and included some individuals who previously would not have been able to get unemployment. So self-employed individuals, or some other individuals who are normally ineligible for regular unemployment are actually allowed to apply for unemployment under the CARES Act. So, keep that in mind. If you're a self-employed individual, that might be an arrow in the quiver to help provide some near-term cash if you're in a cash crunch right now. On the unemployment benefits, the benefits themselves have been expanded. So those payments have been increased by $600 a week, and that extends up to 4 months. The regular unemployment period has been extended by 13 weeks. Those payments are supposed to start immediately. Usually it takes a week or so, and the feedback that I've gotten is that everything, any sort of application that's being submitted as a result of the CARES Act, it's all just taking a little bit more time than what maybe we had anticipated. So just prepare yourself for that, for a little bit longer lead time in trying to get benefits. But I think that covers most of the items that we were wanting to discuss with you guys today. So, if any of you have questions, comments, concerns, please reach out to your Exential advisor. Or if you're not already a client of Exential, but just want to visit with someone or have someone be a sounding board for you, like Monica was talking about earlier, we're happy to do that. And any way that we can help out anyone in these really difficult times, we're glad to do that and glad to be that sounding board and listening ear for you. So we really appreciate all of you and hope you have a wonderful day, and let us know how we can be serving you. Thanks.